In Canada, there are a lot of income ETFs, but something to remember is that not all income ETFs are created equally. Some of them would have higher yield, but they're going to have NAV erosion. So in today's video, I'm going to discuss one of the best ETFs in Canada. I'm talking about income ETF that does not have a NAV erosion. And not only it does have NAV erosion, but also it keeps increasing its distributions months after month. So this is very important. Ladies and gentlemen, something I want to remind you is that I created this channel specifically for Canadians because I have another channel which has a lot of subscribers, but I talk a lot about US investments. And I thought I want to separate these two channels to make sure that the thing I'm talking about, the US specific ETFs, stays for US audience and some Canadians who want to invest in those ETFs, but I want to have a specific channel just for Canadians, and that's why I created this channel. So if you know anyone who wants to learn more about income ETFs, make sure you share with them and talk to them about this channel. And then if you like this content, as always, smash the like button. Do not forget to subscribe because I'm going to keep you updated on income ETFs. And now and then I'm going to be talking about the best Canadian stocks to invest your money for 2026. So without delaying, let's get to it right away. The ETF I'm going to discuss today is Brompton Enhanced Multi-Asset Income ETF, BMAX. I'm going to give you enhanced review about this ETF, and I'm going to show you why this is one of the best ETFs to invest your money now, and especially if you are an income investor. But I would argue, even if you're not an income investor, this ETF has done way greater than a TSX, which is Canadian market. So the first thing we're going to look here is management style, because you need to know what type of investment this is. This is actively managed ETF. They're going to switch those ETFs or underlying ETFs that BMAX is investing in, because BMAX is a fund of fund. I'm going to show you those ETFs that BMAX has, and if you look at the closing price is $14.97. NAV 15, that will update. You can see there's a difference between the price and the NAV. It will adjust a little bit. There usually a few cents difference, and that is because of the management expense ratio. If we look at the monthly distributions, they're paying about 13 cents per month, and distribution rate is the last distribution. It stands around 10. So this is between 10 and 12%. It depends on how much they pay. And the price of BMAX itself when they're paying those distributions, because sometimes they're paying distribution and this ETF is down, and of course your yield is going to be higher. And when it's on the same price as it is today, then of course your yield will be a little bit lower, as we can see here. But you're getting 10% plus. There's a huge growth. Now we're going to look at the main thing about this fund. So that was overview of this fund. If I can read here a little bit so you understand what BMAX has to offer. Brompton Enhanced Multi-Asset Income ETF. BMAX is designed to provide attractive monthly distributions and the opportunity for capital appreciation by investing in a portfolio for Brompton's equity covered call ETFs and fixed income ETF. So this is a different from other income ETFs. For example, we know Hamilton has a bunch of income ETFs, but their ETFs are not designed like this one. This ETF is very special because it has a lot of growth aspect in it, but also it does have those bond which will provide the balance for this ETF to not be so volatile. It's one of my favorite, actually. If you look at more description about this one, they say by combining multiple investment strategies diversified by geography, sector, and asset class, BMAX provides a simple, low-cost access to an actively managed portfolio built for various market conditions. And it's true because they have Europe, they have Canada, they have US, and including those bonds. And of course, they do have gold as well. That actually provide stability for various market conditions. So when the market is bad and good, you know what I'm talking about. Now, if you look at the investment highlight, diversified solution for income and growth, highly monthly income plus growth potential, a cost-effective zero management fee at the ETF level. This is something you have to pay attention, because a lot of investors sometimes they look at, oh, it's zero management. No, it's not like that. This is zero management fee at the ETF level, meaning the ETF itself, BMAX, does not charge any MER or management expense ratio, but the underlying ETFs that the BMAX is composed of charges. So I'm going to show you overall management expense ratio. It's not that much though, right? It's less than 1% at the max. Now, leveraged 33% of NAV to enhance income and capital appreciation potential. So they do have 33% of this ETF leveraged, and that's to enhance. So to explain 33% leveraged from the NAV, meaning, for example, the NAV is, let's say 100,000, right? They would have a 30K leveraged, and that will boost your income. So there is a little aspect of some risk whenever an ETF does that leverage, but I wouldn't worry. These guys are very professional, and ETF has been doing great. So I would say the leverage works. Why invest in multi-asset ETF? Right? Because you can pick any other ETF, but why would you invest in this ETF? So the main reason why you invest in this ETF is that the first one is diversification across asset classes, sectors, and geographies in one ETF. Right. And a second reason, multi-asset blend, combining global equities with the US and split corp. Preferred shares investment have provided a stronger historical performance with the lower volatility. Multi-asset blend, combining global equity with the US and the split corp. Preferred share investment has provided a stronger historical performance with a lower volatility because they have those split shares. I'm going to show you in composition of this ETF. Rebalance is needed to maintain target sectors' asset class weight. And the third and last reason you should consider investing in this ETF is that the rebalance is needed to maintain target sector asset class weight, right? So instead of you buying a bunch of ETFs and you're trying to sell and buy to rebalance, they are going to do that for you. You don't have to worry about that. More fun fact, ticker symbol is BMAX. It trades on Toronto Stock Exchange. Currency is Canadian, and it was incepted on October 20th, 2022. Management fee, as we've discussed, is zero on ETF level, but of course, underlying ETFs, you're going to pay fees. Eligibility, all registered and non-registered accounts. So for people who live in Canada, registered meaning like RSP, TFSA, HFSA, and all those are registered accounts because you're not going to pay tax when you invest in this ETF. And non-registered account, these are taxable accounts. So if you have maxed your tax preferred accounts, now you can invest in taxable account, or if you have corporate account, you can also invest. I do have corporate account and I invested in BMAX. And of course, there's some sort of tax implication with that. But if you have a good accountant, we'll deal with that with no problem. Now, outstanding shares as of May 6, 2026, they're over 10,290,000. Manager or portfolio manager is Brompton Fund Limited. This is a company out of Toronto. Risk rating is medium because it's so well balanced that it's not high risk in ETF. In fact, actually, this ETF, guys, has returned way better than TSX. So that tells you something. And the fund managers, of course, this fund is sponsored by Brompton, but the people who managed on a daily basis, of course, they would have Chief Investment Officer Laura Lau, Michael Clare. This is a Senior Vice President, Senior Portfolio Manager, and your fund is in good hand. If we look at the portfolio composition, now we look at a good thing. So geography allocation. 79.2% of this fund is North America, which will be America, United States, and Canada. It has almost around 20% or 19.4 Europe. That's a developed market. And also they do have 1.4% of this is in Asia, like Japan, Korea, and China. We look at the sector allocation, pretty well balanced. 21% of this fund, which is a big chunk, is a fixed income because right now stocks have gone so much higher. And of course, these managers, I think they're trying to balance it to make sure that the overweight in stocks. So they're up a little bit, 21% in bonds. Their bonds, though, they're mixed. They're not like Canadian bonds. It's just like an international bond. They have Canadian, they have US, and they also have European bonds. So this is really good because each country has a different interest rate. Now, a financial takes about 18.9. They have healthcare, 14.1. They have 13.9 information technology. This is a big tech. And they have 10.6 industrial, 5.5 energy, 3.6 consumer staples, 3.5 utilities, 3.3 communication services, 2.4 consumer discretionary, 2.1 materials, and 1% is in real estate, because real estate has now been doing great. And of course, we know real estate, they don't have much of growth. So they put more growth and more income on these two here, or three sectors, which is a pretty good. Now, these are the top holdings that I have. You remember, as I mentioned, this is a fund of funds, meaning it's one fund that invests in other funds. To make it easy, if you invested yourself in these ETFs, you're going to have to rebalance and dealing with headache of knowing which one to put, and you're going to deal with the headache of thinking and deciding which one you should put more or less. But they have done that for you. As you can see here, there's a Brompton Global Infrastructure. It takes about 13%. Brompton North America Financial Dividend, 12.2. And so on. Brompton Global Dividend Growth, Brompton Tech Leaders ETF. This ETF has done great. If you buy this ETF by itself, it has done really well. It's pretty much a growth as the NASDAQ. So that's a good thing. And also they do pay 5% in dividends. So this is one of the ETF, if you are an investor who wants a little bit of income, but you want a more growth, then I would 100% suggest it to buy Brompton Tech Leaders, because it's one of my favorite. Brompton European Dividend Growth, they have a Brompton North America Low Volatility Dividend. So this is to lower volatility of this ETF. Brompton Global Healthcare, they have a Brompton Split Corp Preferred Share, Brompton Investment Grade Preferred ETF. This is a bond, and they have Brompton Wellington Grade Investment Grade Bond as well. So you can see bonds here take a little bit of some percentage, and compass to 100% of this ETF. Again, you are not going to pay management fees on the BMAX itself, but you're going to pay a management fee on each one of these. And if you put on aggregate, you're going to pay, I didn't do math right now, but I remember it's around 0.6 to 0.86. But remember, you're getting about 10-11%. So if you're paying about 1% on the fees, you still have more than 10% in income. Now we're going to look at performance. So if we check out performance, as you can see here, it has done really well. Now let's look at the growth of $10,000. So this chart provides you more information on growth. If you invested $10,000 end of 2022, close to 2023 when this ETF came out, the NAV at that time was only 11.95. Now fast forward, your portfolio from $10,000 would be almost $18,000, and the NAV would come from $11 to $15. So it has a pretty growth, as you can see here. So as you can see here, there's no NAV erosion. It just keeps going up and up, which is really good. If we look at the annualized return, has returned since inception 17.1. This is very good, because remember, the TSX itself hasn't returned this much. It's around like what, 10%? You are closer to the NASDAQ. That's how good this is. This ETF is like monster. It's good. 17% per year, guys. That including the dividends. If you look at the S&P 500 in the US, it does have about 12% return. So this even beating the S&P 500, which has the biggest stock in tech stock and everything like that. So it's really good. But this is, of course, is comparing since it came out in 2022, or let's say 2023. It hasn't been out for a long time, like S&P 500 or TSX. But if we just look at these 3 years and 2 months that this ETF has been out, it has beaten S&P 500 and TSX historically by far, 17%. But if we stretch for a long time, we don't know what's going to happen. And if you look at the annual return, in 2025, it has returned 18%, 2024, 19.5%, and 2023, 11.2%. 2022, it returned only 6%. The market didn't do well that year. So why are you investing in this ETF, or why do you want to invest in this ETF? There's only one reason. The reason is because you are investing for dividends and income. So if we look at the dividend and distribution history, which is very important, we can see here it has growth, right? Right now they're paying 12, and that was January of 2025. Fast forward in 2026, they're paying around or closer to 13 cents. So it has increased. And if we go back in 2020, I can go here, I can put, for example, if I put 2025, check this. You can see in 2025, they did pay like 11.50. So it has increased from 2025 to from 11 to 12 cents. And if we go back to 2024, you can see here they did pay 10 cents and they increased to 11 cents. Pretty impressive. From 2022, those 3 months in 2022, they did pay 10 cents. In 2023, they paid 10 cents. But then starting from 2024, 2025, 2026, they kept increasing around 5 cents per year, which is pretty impressive. Now, of course, if you invest it now, you're expecting to receive more distribution going forward. So guys, I just wanted to make this video to give you a quick update and a review of one of the best income ETFs in Canada, because this ETF pays monthly distribution. It does grow its distributions. It has performed really well as compared to TSX or even S&P 500. So if you're an investor who wants to invest for income, this is an ETF that you can put in a watch list and see how it performs. And I would recommend to take a very good look at this ETF and maybe consider investing in this ETF. I'm not saying you should. There are other ETFs that have really good performance, but this is one of the best I recommend. Guys, if you like this content, as always, please smash the like button. And if you know anyone who wants to know more about this type of ETFs, please share with that person. So thank you very much for watching. I'll catch you next video. Bye bye.